Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much, much more. Now, here's your host for Real Estate Radio Live, Tom K. Wilson.
Oh, great to have you back with us. We have Eddie Speed with us today on Notes. Stay with us. It's a great program. Thanks for tuning in to our Real Estate Radio Live program, your number one source for all of your real estate needs and education. We're broadcasting from the number one business radio station in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom K. Wilson, your host for the 2 p.m. Wednesday edition of Real Estate Radio Live that comes to you daily Monday through Friday at 3 p.m. along with my program at 2 p.m. on Wednesdays along with my co-hosts Joe Cachera, Mike D'Ambrosio, and Bobby Decker. If you can't make the live show, you can catch our podcasts on reradiolive.com and you can catch my programs on tomwilsonproperties.com or on iTunes or on YouTube. Again, we have Eddie Speed with us today to educate us about notes. Stay with us. You can go to tomwilsonproperties.com and sign up for our weekly newsletter that brings you economic news in the world of real estate, as well as latest offerings and products and education material that we have on our website. And we have a report on how to select the best metro and products to invest in. We always welcome your questions and suggestions for future topics and guests, and free consultation we offer for those that would like a sounding board on thoughts about different options and direction to go with starting or expanding your real estate portfolio. Notes is our business today, and not the kind you take in or you took in school, but notes that are secured by real estate. One of the nation's leading authorities and most experienced note dealer and educators is Eddie Speed. Since 1980, he's dedicated his professional life to the seller financing and non-performing note industry. Over the years, Eddie has introduced innovative ideas and strategies that have positively impacted the way the industry operates today. Eddie Speed founded Note School, which is a highly recognized training company specializing in the teaching of both performing and non-performing discounted mortgage notes. He's the owner and president of Colonial Funding Group, LLC. So it is great to have you back with us today, Eddie.
Thanks, Tom. Glad to be here.
And for those that may have missed it, go to the prior podcast for last week's program, and we did a session program with Eddie on more of the fundamentals and the foundation introduction to note business. That's a good one to start off with before you listen to this one, unless you already have been in the note business or know have gotten some education on it already. So to start off this program, Eddie, let's just kind of set the stage again a little bit with an overview here of what maybe you taught them on the last program. What are notes and how many are available?
Well, we buy discounted real estate secured notes, and so I used an analogy in the other program and said basically if you gave me $1,000 check and I didn't have a checking account and your bank wouldn't let me cash it, the only way I could get to my cash is I'd have to go to a company that was in the business of cashing checks, right? A check cashing service. Mm-hmm. And when they give me $850 for your $1,000 check, they're not really charging me a fee. They're simply buying the note because the check is also a note. They're buying the note for less than what's owed. You owe $1,000. They're paying $850. And that's an analogy of a discounted note, and we buy real estate secured discounted notes. So we could literally buy a note and pay $20,000 for a note that the customer owes $100,000. They still owe $100,000. What we paid for the note doesn't alter what the borrower owes.
Mm-hmm. And the reason for these discounted services is that there just isn't as large a public exposure and demand for notes like this, so they have to discount it because there's a smaller number of people that know how to or interested in buying it, right?
That's correct. There's two types of notes that we focus on, both performing notes and non-performing notes. And performing notes, you can buy discounted notes that are even performing. They may have had a glitch in the past and they weren't performing, but now they're paying good. Or maybe maybe there's something that was not sold to the banks. Maybe it was an owner finance note. All of those notes are paying every month, but you still buy that note for less than what the borrower owes, enabling you to earn the interest on the note plus the discount you bought the note at, which makes your return higher than the interest rate on the note.
But the non-performing notes, I presume the advantage you get is that you can buy them at a deeper discount because less people want them.
Exactly, and there's this big distribution system of these notes because of this incredible inventory. Like we said in the other show that we did, we talked about this crazy imbalance of how many notes. I mean, literally 9 million defaulted notes, and there's pressure for them to get rid of these notes because of the municipalities. They're not paying city services. They're not paying taxes and water and sewer, and these guys are in a spot where they really need to get rid of them. So there's this. That's
amazing that there's that many notes still after all of this. What are we now? 7 years into this, and there's still that many notes left. Isn't that amazing?
A
lot of people don't realize that. I run across people all the time that are in bubble cities, and they think everything's cleared out. They don't think there's anything upside down or any bad performing notes anymore.
I'm not sure
not the case.
That may be somewhat intentional that we're led to believe that, by the way. But the data does not support the hope it's all gone. The bubble has not all washed away, and therein lies what we believe is the greatest opportunity in the note industry. The next 5 years, we believe, will be the greatest window of opportunity we've ever seen. And I've been doing this for quite a while. I've been doing it since 1980, and I think these next 5 years ahead of me are the best I will have ever experienced.
Well, you've seen a few curves. I know John Schaub, whom I also highly respect, always asks people if they like roller coasters. They say yes. He says, "Well, you're going to love real estate."
Yeah.
Yeah, you've seen a little bit of a roller coaster since 1980, haven't you?
I have.
What do you prefer? What do you prefer, Eddie? Do you prefer non-performing or bad performing, poor performing notes?
Well, non-performing notes has been a chapter over my career. I've been buying performing notes for all 35 years of my career.
Okay.
I've been buying non-performing notes. I was really heavy back in the old famous RTC days, right? Resolution Trust Corporation, and we bought a lot of assets then. I bought distressed assets through the 1990s. In the early 2000s, up until 2008, I didn't buy any non-performing notes because there wasn't hardly any to buy.
Ah, okay, yes.
And
there just wasn't much supply.
I've weaved in and out of the non-performing note space. And I don't know that we really have a preference. It's, I've never seen such an inventory of non-performing notes in my career. I literally, even though I, of course, express this and teach this all day, every day to some degree, either internally working in the business or teaching in the note school world, but I still stop and look at and just think about how much inventory. We only had 4.5 million properties that sold as REO properties in a 5-year run, the biggest run you and I've ever seen in selling REOs.
Mm-hmm. Okay. So I presume the non-performing, the advantage is that you're going to get a bigger discount, and if your strategy is to acquire products and you want to foreclose, then that's probably what you should focus on. But I presume there's a lot more due diligence.
There is.
And more work. More work to manage it.
There is. The advantage in due diligence today, I go to a lot of industry trade shows, where the hedge funds or the guys that, are spending billions of dollars, and I try to follow suit with them in the analytics and data that we can buy. And I can, for the efficiency today and the data that I can buy for due diligence is so much different than the note space I grew up in, when you didn't have the internet and you didn't have all these companies that had crazy data from crime to rent stability to property information and, just tons of stuff that was never available. And so one of the things that's really changed for us, and we like it a lot better, is how quickly we can evaluate what loans we really want to spend time and work on. We can take 1,000 loans and order data and put that data lay it over the top of those 1,000 loans, and we can eliminate 400 loans that we wouldn't spend 10 seconds looking at.
Where in the past you might have spent a lot more time trying to weed those out.
Days of grinding through stuff. And so we like that part because it lets us focus on things that you can really make money on.
Well, you can pick out more diamonds in the rough in less time, huh?
That's correct.
Okay. What about so how are the banks now, you think, starting to deal with sell notes more than go through the longer process of short sales?
All of them have announced it. Fannie Mae, Freddie Mac, FHA, all have announced that basically they're going in the direction of selling non-performing loans in lieu of taking them to foreclosure. So far this year, between several of the big banks and the 3 government quasi-entities I've mentioned, they have announced a cumulative amount. Now, this is just what made the press. This is not all the loans that would have been offered. These are just loans that were offered in the press. $7 billion in non-performing loans that have been pushed out since January 1st of this year.
Interesting. We'll have Eddie back after the break here in a moment. Just want to let you know that if you're interested in more information about notes, you can go to noteschool.com. If Eddie's business. You can also go to, if you're listening to this prior to May 9, 2015 on podcast, you can also go to TomWilsonProperties.com or to sjrei.org and attend on May 7 a evening program with Eddie in person and Domain Hotel in Sunnyvale at 7 p.m. Need to sign up for it. And also doing an all-day workshop from 9 to 4 at Domain Hotel on May 9 of 2015. And that will be an all-day program, which will be terrific. So we're listening to Eddie Speed, a national authority and educator in the note business. This is Real Estate Radio Live, and we would love to have you stay with us here and to get a lot more information from Eddie. We'll be back in just a moment.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
Got Eddie Speed with us today. The topic is real estate secured notes. Eddie's a leading authority and experienced dealer in notes and a great educator. It's nice to have him with us today. So we're talking about all the notes that are coming up, that the banks it's rumored that they're going to start putting more notes on the market and not doing short sales as much and not doing foreclosures as much because it's a longer process that's expensive to them. So it could be, Eddie feels, the next 5 years, but don't wait that long. We never know how long these windows of opportunities are, that dealing in notes may be something that you should consider, both for long-term income streams or as a method for acquiring properties. So it's kind of ironic. We haven't had a period of time that has had as many non-performing notes. That's something that Eddie normally has not dealt with too much until recent years, when for the first time, there were a lot of them compared to just sub-performing notes. So you have to look at your strategy and decide what to go through, and also which approach to take. But you need some education. So Eddie Speed's company, noteschool.com, can provide that, and you can come to sjrei.org on May 7 for the monthly program, or to the workshop on May 9 in Sunnyvale, 9 to 4. And go to tomwilsonproperties.com. We'll be glad to give you more information. What should we tell them next, Eddie?
Well, a lot of people ask us when you're looking at these loans, how are they priced? When I buy a non-performing note, do I buy it, at 20% of what's owed or 50% of what's owed? And so when we're buying a non-performing note, we kind of have a mindset of we're just a pawn shop for real estate. So we're just buying it at a percentage of the as-is value of the property. Typically speaking, if you're buying an REO property, a bank foreclosed property, and think in terms of, Tom, if you're the market price is going to, that house is going to bring $80,000 as an REO, right, as a bank foreclosed property, that note is typically going to cost about half of that. So it's going to cost the defaulted note's going to cost $40,000. The property's going to cost $80,000. That's the reason real estate investors would do it.
Yep. Okay. Eddie, how do you address those that say, but I like real estate because, I not only get some cash flow, but I get some appreciation with time, and it's an inflation hedge? What's kind of your retort to that, and considering notes either in addition to or instead of real assets?
Well, I would say that if I'm buying a note for $40,000 and the property's worth $80,000, when I get to the property, I hit a pretty immediate appreciation project, right? And at the end of the day, I can keep the property, and we teach a lot of techniques that teach you how to sell the property and use financing techniques to sell it. But the reality is if you're buying a non-performing note, you're just simply buying the note as a potential way to get to the property. Now, the good news is if I buy a note and somebody can modify and start paying again, get them restarted and keep their house, and we're thrilled to do that because, remember, we bought the note at a deep discount, so we got a huge return on our investment.
So it sounds like your retort in part is that you take your appreciation up front because you bought it at a lot more discount than you probably could have bought a similar property for. And then at any point you could convert that to real property if your long-term strategy is to get an inflation hedge.
Yep, and that's very common. We have a lot of people that we've worked with that live in the Bay Area, and that's exactly what they do. They buy notes and hold them as rentals, and as you alluded to earlier, have them managed, and that's what they want to do is hold the property.
Okay, good. Well, we have we got a lot more for you with Eddie Speed. Stay with us. We're going to talk about many more aspects about inflation, deflation. How do you go about choosing sources? How do you do the due diligence? What's the education process that you need? How can Eddie's programs help you with that? So stay with us on KDOW 1220 AM, the Real Estate Radio Live program with Eddie Speed, talking about the business of notes. Stay with us, and we'll be right back.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
If you ever wondered what the note business is all about, you're listening to the right program right now. We've got Eddie Speed, National Authority on Notes, 30 years in it, and a great educator. Nice having Eddie with us. So, Eddie, let's say my appetite's been whet. Gee, this is pretty interesting notes. Maybe there's more notes to chase and better supply-demand opportunity than there is houses now, which all investors know are so hard to get. My gosh, we go through hundreds just to get a few in our Wilson Investment Properties program to get quality product. And so it's really tough. So maybe this is a new way to get product. So someone says, all right, I see why there's an advantage in it, and it looks like it might be an increasing opportunity, but I'm still kind of nervous about it. I don't know anything about it. How do I figure out if I'm getting a good note? Who's there to help me? What's available? How do I go about this due diligence process?
Well, internally, the first thing that we do is we use data that is available, and I alluded to this earlier. We can buy so much information today, so we can run crime, we can run economical characteristics of the neighborhood, stability of the neighborhood, we can run inventory of the neighborhood. We can do a lot of things today very quickly that is unlike how we used to do it years ago. Now, it doesn't replace ultimately having boots on the ground, but boots on the ground today, because there's been so many distressed assets, both houses and notes, there's so many services that can do things for us that was not available years ago when you and I started doing this, Tom. So there's a lot of services and processes that are very mechanized, and now, since the distressed market started 2008, it's a very mature industry of vendors that I can use to help me. I say there's three things that'll make you make a bad buy in buying non-performing notes. Three things: blighted property, tax, and title.
Okay.
Blighted property means the property not worth fixing.
Mm-hmm.
Taxes means that there's property taxes due and somebody's bought the tax lien and they've wiped us out. And then there's title issues. There, you want to make sure that you're buying a valid lien against the property. And obviously, people say, "What do you cover at note school?" We'll take a wild guess, right? we take a deep drill down on those subjects.
Okay. All right. How long would you say it takes someone to learn enough to start buying notes? And to what degree do they have to just figure out how to do it themselves versus just come to your company note school and say, all right, I'd like to do it. Can you kind of walk me through it or provide services to do it for me?
Let's say that somebody has already been involved in real estate. I like to say they're 80% already there because they're looking at the collateral and there are certain things. There's clearly things we think we can help them with because we do it all day, every day, and we just have tested things and experienced things that anybody would have, we think, a little more efficiency if we were able to influence how they went about it. But if they're a beginner, we're going to teach them a lot of the same processes that a real estate investor would learn. The neighborhood, the valuation of property, the exit strategies, all those type of things. So it just depends on how much real estate experience they've got. We can take somebody with 0 or somebody with 1,000 properties of experience.
Okay, let's continue that when we come back after the break. We've got Eddie Speed with us, a national expert in the note business, teaching us about that and how we can get involved in it. Remember, there's a SJREI meeting on the May 7th on that topic with Eddie Speed and a workshop on May 9. Go to TomWilsonProperties.com and you can find out more information about it. Stay with us. More good information from Eddie Speed in just a couple moments.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
We're fortunate to have Eddie Speed with us today, national expert on the note business and a great educator as well. It's great having him with us. If by chance you missed the first segment on fundamentals intro, go back and look at the podcast for that. That's a good intro. Eddie, we were talking before the break about the process of buying in. I think you were talking a fair amount about the about how you can get educated. But let's say someone gets their education, uses your resource or others, and they today I want to buy a note, and they call you up. And what's that process look like? How long does it take? What do they do? And let's keep it a little simpler. Let's talk about a sub-performing note rather than a non-performing note.
Okay. Well, and when I would say the loans that we see that are what we call performing notes aren't necessarily sub-performing. We see loans that have a perfect pay history. They may have had a glitch in the past, or they may have been could have been an owner finance note, and the buyer originally had some weak credit or something. But that doesn't mean they have a bad pay history. And so we look at consistency of the pay history every month. Are they making their payment every month as promised? And then what would I want to know? Well, I'm hoping that they will continue to pay, but I still need to evaluate what the collateral is worth. So the common thing that is done in our industry is not necessarily an appraisal, but a broker price opinion from a real estate agent, a BPO, they call it.
Yep.
And that is the industry thread. And so I'm going to look at kind of the investment in the note. Let's just use a simple analogy here. The BPO on the house is $100,000. Okay, if I'm buying a note that they are paying beautifully, I might pay $80,000 for that note because I'm thinking it's not going to default and I'm not going to have to repossess it. I just built a $20,000 safety net. God forbid for something happens. And
you're saying in this example you're talking about a note that's worth was originally $100,000.
It could have been $100,000, or it could have been $90,000. But I'm still buying the note probably at a discount. But
so it sounds like you're tying the value of the note, what you would pay for the note, more to the house value than you are to the note value.
Well,
original note value.
It's an either or. If I'm buying a performing note, I want to buy the note where I'm satisfied with the annual return, the interest essentially I'm making for my investment. Okay, but I have another test that I need to run, and that is I need to test the investment in the note compared to the value of the property. Now,
make sure you have sufficient collateral value there to protect yourself.
And we call that investment to value ratio.
Okay.
Not loan to value, but investment to value. And so, so I'm going to look at the value of the property, and I'm going to look at my investment in it. I'm going to look at the stability of the pay history, how long they've been paying, how well they've been paying. And then I'm going to make sure that, all of the paperwork lines up. If I'm buying a note, I want to make sure that, I've got the proper chain of the endorsement of the note, and if it's got a deed of trust securing it or whatever the legal enforcement document is, that can be a deed of trust or a mortgage depending on the state. I want to make sure that all of that stuff lines up. And by the way, Tom, there are companies that provide review of such things today that was never ever available in the past, but there's such a volume of this that there's people that's made it much easier for the efficiency of time and also the knowledge. You don't have to. You want to just make sure you got a good chain of title. We're not trying to make you an abstractor just to review your investment, right?
Yep. Okay. Good. Well, that's good stuff. So it's so there's, and how long does this process usually take? For a performing or sub-performing note.
Well,
we talking about 2 hours or 2 weeks or?
Well, if you have all the paperwork, it probably shouldn't take you less than 30 or 45 minutes to review everything. We try to, when we sell notes to investors, we already kind of know what they're going to need, right? You already heard me say this, blighted property tax and title. So we already try to have the property valuation, the information, a tax certificate showing exactly if there's any taxes owed, and we try to have a title search. So if somebody's selling the loans to you and they've already provided you the things you're going to need, now you're just looking at a summary of what they have. If you had to go out and order all that stuff, and when we buy 1,000 notes, trust me, we do, then it's going to take a little longer because you got to wait on the order to come back and get the information that you're going to need to evaluate.
Okay, good. Well, I'm sorry we're running short on time, and in about a minute, can you just summarize the different ways one can use other people's money to finance some of these, and especially maybe how you can help with getting the seller, the owner, to finance?
The owner financing is an old technique, but we have some stuff that we think is really pretty cutting edge for investors that lets them buy an asset where you owner finance it and get a property that would be totally paid for in 5 years. And because of the payment, but it's a double your money deal in 5 years.
Okay. Using IRA money, you think, is a good technique?
IRA money, we probably do as much training for the IRA administration companies as just about anybody in the business. I think a lot of them really feel like that IRA investing with notes is like a perfect combination, and so there's huge capital, as you well know, in that space. Just waiting for the right kind of deal.
Yep. And boy, I think in this day and age, with how many people think the stock market has a long way to go up versus might be nearing its top? For heaven's sakes, if you think it's nearing its top, maybe it's time to take some of that money out and go put it in something else, like either real assets or notes. That would be, I think, that'd be good alternatives. So self-directed IRAs, I think, are primed to move money into other deals. We got Eddie Speed with us today on calling in from Dallas. He'll be up here with us in the Bay Area on May 7 and 9. Go to TomWilsonProperties.com or sjrei.org for more information. And come back with us in a moment. We'll summarize some information for you and give you some more details about those events and summarize the note information that we've given to you today.
For more information on today's program, visit reradiolive.com. That's reradiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit reradiolive.com. That's reradiolive.com. Again, your host for today's edition of Real Estate Radio Live, Tom K. Wilson.
What a treat to have Eddie Speed with us today, a nationally known educator and dealer in the business of real estate secured notes, which I like that definition. We throw around the word note and a lot, but the importance is that it's secured by real estate, so that's a whole different ball game than something that's not secured. So we've had a good intro. If you missed last segment or last program, go back to the podcast and review that. Had a lot of good fundamental, basic information that Eddie taught us. You can always go to Eddie's website, noteschool.com, to get more information. If you're listening to this prior to the May 2015 SJREI meeting, Eddie will be out as the keynote speaker for that on May 7, and on May 9, an all-day workshop in 9 to 4. That's in Sunnyvale. Go to TomWilsonProperties.com for more information, or to go to sjrei.org. And on TomWilsonProperties.com, you'll also see various opportunities. You'll certainly get the podcast for this. There's opportunities to buy rental homes if that's what you prefer to do, or in blend with other things like notes, and also commercial syndications. We have retail centers and so forth, which have been cherry-picked diamonds out of the rough, some of the best ones we can find. So go take a look at that. Look at those opportunities too. Also, the newsletter, economics newsletter, that you can sign up to on TomWilsonProperties.com. Any closing closing thoughts or that you want to leave with us, Eddie, for the last minute or so?
It's just the one thing I would say is there's so many different opportunities with notes. I mean, we've obviously just hit the tip of the iceberg. Note School kind of does about half training on performing notes and about half of its training on non-performing notes. And we've got some very interesting and we think innovative techniques on using retirement accounts and other people's retirement accounts, and some leveraging techniques that are sort of unique to notes, and financing techniques that are in the seller finance space. And obviously I've been doing that for about 35 years, so I've kind of had some good teachers like real estate investors like you that have shown me some really cool stuff. So it's I would say every real estate investor truly does need to understand how they can utilize notes in the business.
Mm-hmm. Okay.
And I don't know if you've ever heard the riddle, but I think it's somewhat true. Every real estate investor wants to grow up and be a little bit in the note business one day.
I have heard that, and sounds like even if someone likes to hold real assets for the most part or in part, notes just kind of expands the opportunities and makes a more complete portfolio and picture for their real estate investing. Eddie, thanks so much for being with us. We look forward to having you here in the Bay Area here in a couple of weeks, and we'd love to have you back on the program sometime.
All right.
Remember, the only thing that matters, you're very welcome. Remember, the only thing that matters is what you do next. Come to these events and look for our future broadcasts that are coming up here very soon. Thanks for being with us.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Tune in, log in, download our podcast. Discover more at RERadiolive.com. RERadiolive.com.